Hi, I'm Ross Mayfield, investment strategy analyst at Baird, and we are back for another weekly update with our friends at Strategas. Today, I'm thrilled to be joined by Managing Director and Head of Technical Strategy, Chris Verrone, to talk all things markets. Chris, how are you doing this morning?
I'm doing great. Thanks for having me, Ross.
Yeah, thrilled to talk to you, and I want to spend some time getting an update on a few of your kind of big themes that you've talked about of late. The first of which being the average stock versus the top of the market, and in this case, that kind of being the mega cap tech conglomerate. Could you give us an update on that theme and kind of how it informs your broader thinking?
Yeah, Russ, and I'm glad we start here. This has really been seminal in our thinking, particularly over the last year. But it goes back to the idea that, for the better part of the last decade, really all you had to do was own the quote top of the market, the largest issues, the largest weights, Apple, Microsoft, Google, etc. Right? Those are where the weight of the index has been. I think we're continuing to see a massive shift away from that. And we've advocated owning the average issue. So we look at the S&P 500 equally weighted, where every single stock has the same weighting. That continues to outperform, again, the top of the market. We can look at the triple Qs, which is a very tech-heavy index, or just the S&P cap-weighted itself. So owning the average issue, I think that's where the leadership will continue to be as we look at the months and the quarters ahead from here.
Yeah, I think it's a great way to think about the market as opposed to some of the more, classic like value growth type, buckets. Another theme that you've talked about a lot and has proven very correct over the last couple of weeks is the idea of kind of stickier bond yields, or that when bond yields were heading down, throughout July and August, that maybe necessarily wasn't confirmed by some of the other things you were seeing. Bond yields have spiked yet again, and it's informed kind of what's happening in the equity market. So I wondered if you could talk about what's happening in fixed income and how it's informing what's going on in the stock market.
Sure, that's right, Russ. And I think this has been a really big part of our thinking this year, particularly this summer. And when we go around and we talk to clients and we're in meetings, I just got this sense, particularly over the last month or two, that investors were pretty confident in the idea that bond yields had likely peaked for the cycle, and we just didn't see it that way. And when we kind of survey the global landscape today, I mean, we have UK yields at new highs, we have US 30-year yields at new highs, US 2-year yields at new highs. So I think this idea that bonds are not a hedge to equities, which has been a dominant theme in our work all year, certainly remains relevant today. And where it really manifests itself, I think, is in the leadership relationships that are bearing out. And we talked about just a minute ago the top of the market versus the average stock. I think one of the reasons the top of the market, which is a lot of these long duration tech stocks, are underperforming is because rates continue to remain stickier and higher than I think the consensus expected. So we see the rate environment, the fixed income environment, I think very heavily influencing what the leadership backdrop of this market looks like. It's why we continue to really recommend underweights in technology.
Yeah, well, let's keep going on that idea, the idea of leadership, right? So let's get a little more granular. What sectors continue to look like leadership, and then if we dare leave the shores of the U.S., is there anywhere abroad that looks interesting or looks like leadership versus kind of the U.S. stocks that have outperformed this year?
Well, the second part of that question is more difficult, but we'll get to that in a minute. I think when we look domestically, our sense is there's still a fairly late cycle leadership orientation, and we see it through the outperformance from utilities that continues. Youth remain quite strong in our work. I found it very interesting over the last several days. Even as oil has rolled over, crude's back to $82 or $83 as we speak this morning, the energy stocks have actually held in there. So the resiliency from the energy issues, I think, is actually speaking to the idea that the weakness in oil may not be structural this time around. Like typically in the past, when you saw weakness in oil, you saw energy stocks down as well. That hasn't been the case here. I think that's interesting. We've seen some modest improvement in the industrials, and we've seen some modest improvement in discretionary. Where I think we're just not seeing it, or we're not seeing kind of these bear markets expire or really start to improve, is technology. And again, we talk about the top of the market, but up and down tech, only about 20% of the sector is actually in an uptrend. That's a very difficult environment to source ideas from. It's a difficult environment to make money. And so tech for us still on the wrong side of the leadership ledger. It still remains primarily defensive in terms of what's working. When I look globally, I think if there's a bright spot globally in the emerging markets, it remains India. That's been true for much of the year. It's been a leader. It remains so. If I'm looking at developed Asia, it's Japan. And certainly the weakness in the currency has helped, but Japanese equities have really separated from the pack when we look at geographic opportunities outside of the United States.
Well, Chris, that's tremendous insight. I think it gives our clients a lot to think about and a lot to parse. So thank you so much for the time, and we'll really look forward to talking to you again soon.
Have a great day, Ross. Thank you.